Okay, this problem here is one in my math, and what's happening here is you have an attorney, they're purchasing an office building and the land that the building is sitting on for $1.4 million. And so we have to be able to allocate this $1.4 million between the land and the office building because part of that 1.4 is for the building, part of it's for the land. And so how do we do that? How do we figure out how much goes to each asset that was purchased? Well, you can either use the fair market value, or in the case of real estate, you can use the city's tax assessed value to figure out a proportionate percentage for each one. And so in this case, it says the tax assessment records show the property as follows. Land is $426,736 and building is $572.50. And you're supposed to allocate this $1.4 million between the two and just give what value you would record on your books for land and what value you would record on your books for building. And one of the important things that it says is to make sure you round your percents to 2 decimal places. And so when we go through the calculation and the example, I'll show you what I'm talking about there. So let me pull up my example. Okay, and so for our example, it says on April 1, Laurel Company paid $840,000 cash. So this $840,000 cash is what we're trying to allocate between the real property that was purchased. And the real property consisted of land and building, just like your example in my math. To allocate the cost of the property acquired, Laurel had the property appraised. So instead of using tax assessed value like they do in my math, they're using fair market value, but it's the same exact calculation. So the appraised value for the land ended up being $576,000, and the office building ended up being $384,000. So what you have to do is you have to plug in, and you'll have to do these calculations on a separate piece of paper. As you can see in my math, let me pull that back up. All you have to do is put in the value that you've come up for the land and the building. So this calculation here, you would be doing on a separate piece of paper. And so what you have to do first is put in the proper fair market value or city assessed value, city tax assessment value in for each of the assets. So in this particular example, the appraised value was $576,000 for the land and $384,000 for the building. One area where students have struggled with this in the past is they've gotten these flip-flopped, and therefore they're putting in the wrong numbers for each of the assets. Make sure you're putting in the right value for each asset. And so when you add the appraised value or the city tax assessment values together for the land and the building, you get a total tax assessed or fair market value of $960,000. And you can see that that's different than what we actually paid for it. The company actually only paid $840,000 cash. So they got a good deal. And that happens quite a bit, right? You pay a different value depending on how you negotiate the deal as to what the fair market value, the appraised value, the city assessed value is. So now what we have to do is figure out what proportion of this total is the land and what proportion of that total is the building, and how do we do that? What we do is we take each individual asset and divide it by the total, and that gives us a percentage of the assessed value or the fair market value. And so if we pull the calculator up, 576,000 divided by 384,000, I'm sorry, divided by the total, 960,000. That gives us 60%. So I'm going to key that in here, 60%. Okay. Then I do the same thing for the building. 384,000 divided by $960,000 total gives us 40%. And this should always come up to 100% when you add these two together. So what is this telling us? This is telling us that 60% of this fair market value is the land, and 40% of the fair market value is the building. So now we can make the leap that if 60% of the fair market value is the land, then 60% of what we paid for it should be allocated to the land. So now what you can do is take the percentage of the fair market value, multiply it times what you actually paid for it, and come up with the cost that we can allocate to the land. And so in this particular example, we paid $840,000 for the property. And we said that 60% of the fair market value is made up of the land. So we're going to say 60% of what we paid for it should be allocated to the land. So 840,000 times 60% gives me $504,000 that I'm going to allocate to the land of this 840. And then I'll do the same exact calculation for the building. When we did the 384,000 divided by the total fair market value of 960, we came up with 40%. So 40% of the fair market value is for the building. So now we can make the leap and say, okay, if 40% of the fair market value is for the building, 40% of what we paid for it should be for the building. And so we only paid 840,000. If we multiply that times the 40% that we came up with, then $336,000 should be allocated to the building. Okay, and when you finish this calculation, you add the two together, you should come back to what you paid for. So we paid $840,000. That's how much we're allocating to each one. Okay, so that's where my math will stop. If you continued on with the example and actually recorded the journal entry for purchasing this land, you can see that here that requirement 2 says prepare the journal entry to record the land and building in the accounting records. If Laurel Company put $168,000 cash down on the property and financed the remaining with a 30-year mortgage. And so we've said that land is going to be $504,000. So land is an asset. It gets increased with the debit. So we know that has to come first, either the land or the building. It doesn't matter which one you put first. They're both debits. Building is also an asset, and it gets increased with the debit. So $336,000. That's what we decided we were going to allocate to that. And then it says we paid $168,000 cash down for this property. So cash is an asset and it's decreasing. So it gets decreased with the credit. And the rest was on a mortgage. So we can do mortgage payable or notes payable. And that is a liability. So it gets increased with a credit. So the difference between $840,000, what we paid for it, and $168,000 cash is going to be $672,000. That's what we borrowed on the note. Okay. One thing I want to point out with this particular problem in my math, you notice that when I did my fair market percentages, it comes up to a whole percent, 60%, 40%. When you do your calculations in my math, you're going to come out to a lot larger decimal. Let's say, for instance, let's say I'm dealing with land that costs $475,000 or has a fair market value of $475,892, and my total fair market value is still $960. So when I divide the land value of $475,892 divided by $960 total fair market value, I come up with 0.4957208. So you see this is a huge decimal. When I convert that to a percent, in my open math, you can see that, let me pull that back up. You can see that the directions tell you round your percents to 2 decimal places. So when I do this calculation, to convert this decimal to a percent, you know you move your decimal to the right 2 places. So we're looking at 49%. But that's a whole percent, and the directions are telling me to round it to 2 decimal places. So what I need to do is make this 49.57%. Okay? It's going to make a difference in the numbers that you come up with here. If you just rounded this to 49% and multiplied that times the 1.4 million, your number would be way different than if you take it out 2 decimal places and do the 1.4 million times 49.57%. Okay, so make sure you're using those first 4 numbers and rounding this to the nearest four numbers to round this to the nearest 2 decimal places when you're converting to a percent. Okay. My example here just happened to round to a nice, neat whole number, so we didn't have to worry about it in this example.